Let's take a look back at this day in history. Back in 1995, Baring Brothers and Company, the British merchant bank that funded the Napoleonic Wars and the Louisiana Purchase, ceased to be no more, felled by staggering losses at the hands of rogue trader Nick Leeson. Now, Leeson's job at the time was to arbitrage price differences between the Nikkei stock index contracts that traded in Japan and those that traded in Singapore. This meant opening large directional positions and hedging them to guard against sudden shifts in the market. But sometime in 1993, Leeson got the idea that he could keep opening new positions, but not actually hedge them. This was an effort to generate better returns, and they did. It paid off big. The Barings Futures division in Singapore that he managed posted profit in 93 that was 8 times what it reported in 1992, and profit in the first half of 1994 alone was more than double what the unit made in all of 1993. Now, those profits did raise eyebrows back at Barings headquarters. The board even did an audit, but decided there weren't enough red flags to actually act. What they didn't know, however, was that Leeson was actually hiding trading losses in a separate account, uncreatively called error account number 88888. But in early 1995, that account became public, and it all came crashing down. A massive earthquake shook Japan on January 17th of 1995. That pushed the Nikkei stock index down 8% over 5 days, and Leeson's leveraged trades went severely underwater, approaching $1.4 billion of losses. And the margin calls, they started to pour in. Barings had to wire as much as $896 million in total to help pay those margin calls. But by February 23rd, the Nikkei was still drifting lower, and quite frankly, the money was running out. On February 24th, a cryptic fax, I should say, from Leeson landed on the desk of the company's finance director, apologizing for, quote, the predicament that I have left you in. Barings quickly found out it was holding the bag on hundreds of millions of dollars of losses and hundreds of millions of dollars more of open futures contracts that were on their way to effectively being worth zero. Bank of England Governor Eddie George was called back from a skiing holiday to help, and by February 26, Barings would be forced into administration, and 7 days later, it was bought out by Dutch rival ING for £1 plus $1 billion or so in liabilities.